If the world understood Bitcoin the way I see it, then we would have a multi-billion-dollar Bitcoin. Bitcoin is the equivalent of the property market for the last 40 years, except that 100x that you had to wait 40 years for in property, you're probably going to get that condensed into the next 10 years. So I look at this and think, if I'm a millennial, I'm trying to figure out how to get as much of this Bitcoin as I can, because property's not going to do it, stocks are definitely not going to do it, and the bonds are just, that stuff's worth less than toilet paper. 12 months ago, it was a career risk to be advising on Bitcoin, and now it's a career risk not to be advising on. People who stand to benefit from Bitcoin the most are the poorest. The smaller companies, they can have an outsized return relative to the large companies. It's not the big that eat the small, it's the fast that eat the slow.
Do you think we'll still see the classic cycles just because human psychology?
Then I think there's going to be a moment that things just completely change, and someone with a money printer understands what this is and realises that there's no second best, there's no ability to get more once this is gone and it's tucked away in your coffers, and they will buy literally every Bitcoin available that's on the market. The powers that be will understand that this is absolute scarcity in an asset, and they will want it.
Hey everyone, just a quick note before we start. Over the past few months, this podcast has been growing, and I'm super grateful for that. Over 50,000 of you regularly tune in, but I've also seen that over 65% of you still haven't subscribed yet. So if you enjoy what I'm doing, if you enjoy the content and the conversations, please take 1 second to hit subscribe on YouTube or follow me on your favorite podcasting app. This small click actually makes a huge difference and helps fuel the algorithm so we can reach more people and educate them on Bitcoin. I appreciate your support. Thank you for watching. Keep the comments going. Now let's dive into this episode.
I'm really excited to chat. You were guest number 2. So now you're back as in episode 138. So we're rolling. And yeah, man, I'm super happy to chat. I was thinking maybe it's nice for this conversation with you to kind of like do like a Q1 recap and then kind of like an outlook towards the rest of the year. I know you follow all the macro stuff very closely, more than I do. So I'm always happy to learn from you. So yeah, if you're up for that, let's do it.
Let's dig in then. I think Q1 has been really a mixed bag. So Q1 2025, where we are today, it's the 24th of March. We're nearly at the end of the first quarter. And to say the price action with Bitcoin has been a little disappointing, I think would be an understatement. And when we started the quarter, price was ripping. We were on our way to new all-time highs. And what's transpired in that first quarter, because price action dictates sentiment, is we reached an all-time high of $109,000 and now we're sitting at circa 87,000. But that's off the lows of a $76,500 USD. So we've peaked up to all-time highs of 109. Everyone was jubilant, thinking, great, we're on our way to 200. And then the market had other ideas and crashed the price, call it 30%, which in the grand scheme of things isn't a big deal. But in light of where we were and some macro events that were happening, and say probably more so geopolitical, I think it felt like a real kick in the guts, because the biggest thing that we had in this quarter was the US government endorse Bitcoin and say that, this is going to be part of their national policy moving forward. We had the announcement of the strategic Bitcoin reserve. And if you had have asked any Bitcoiner in the last 5 years, if the US government announces the support of Bitcoin and a strategic reserve where they're going to get 1 million Bitcoin and they're going to get as much Bitcoin as possible, you would have expected the price to move at least double in price. But we didn't see any of that whatsoever. We've seen the price drop 30%. And so I think there's just and this is probably worth recapping for anyone new to Bitcoin. Whatever you think Bitcoin's going to do, it's just going to do whatever it's going to do. And you've just got to deal with it. It's something that I would never envisaged on the back of that news that we'd have a major crash. But there are sort of, to me, from a policy perspective, there are 3 huge things that have happened. 2 have gotten the attention, but 1 I think has sailed under the radar, which will actually, in time, supersede the importance of the previous 2. So the first is US government support. That's the biggest thing. That's to me that. What that represents is that now firmly shifts the ability to buy Bitcoin at today's prices as the best risk-adjusted return time to buy Bitcoin that I've ever seen. And this is looking at this thing for the last 10 years. And the reason why I say that is because when the government, or the major superpower of the world, endorses this, all of a sudden this takes the left tail event of Bitcoin going to zero off the table. No longer are we going to zero or have a chance of going to zero when they support it. Now, I know that might not bring joy to my cypherpunk friends, but that's just the reality of where we are right now. And, Bitcoin is really now, shifting focus to the mainstream and Wall Street. And what that means is that left tail event means that we have the best risk-adjusted time to be buying Bitcoin. So if you're not in Bitcoin now, you should really be allocating quite heavily, because now is your opportunity, because the downside's covered and it's nothing but upside. And I firmly believe that over the next, call it 15 to 20 years, there's more upside in front of us than there is behind us. And if you think that, then, we're going to see probably at least 100 to 150x return over the next 10 years. And, if you look back the last 10 years, you're probably getting a 100 to 150x return, but those returns are going to happen again, I think, in the next 10 years. The second thing is the strategic Bitcoin reserve. So on the top of government endorsement by the US and removing that left-hand tail risk, you now have a strategic Bitcoin reserve where the nation state gamifying, this is what I find really amusing. Now nation states are playing the game that every Bitcoiner on earth is playing, like, i.e., how do we accumulate more Bitcoin for the lowest risk possible? Now, the existing Bitcoin that they've got has effectively been stolen from people, but they're actually looking at how they then go and purchase that. And they've talked about having 1 million Bitcoin. There's been other people who've talked about you should have 4 or 5 million. And you've got a whole host of Bitcoiners in that administration who are actively pursuing ways and means to add to that strategic Bitcoin reserve. Now, importantly, and probably one of the biggest things about that I believe is going to be brought into the policy regime of that, is that whatever they put into that strategic Bitcoin reserve is going to be locked up for at least a 20-year period. And so one of the big things that, as Bitcoiners we worry about is, it's all good and well to watch someone buy 1 million Bitcoin. But what happens if there's a change of administration and they want to start unwinding that position? And what's really interesting about this, and this is where my brothers probably talk more about this than anyone else that I'm aware of, is the ability to time lock Bitcoin. And Bitcoin is one of the, probably the only asset that I know on earth that you can actually lock that asset up for a 20-year period. So regardless of what the political machinations are at the time or political leanings, you have the ability to lock that, time lock that asset for the 20-year period to ensure that no one can touch that in that period of time. And hopefully there is a level of understanding and education from the policymakers in that period of time that realizes, oh, wasn't that clever? They actually time locked this Bitcoin for us so we couldn't touch it. And, you avoid a situation like what happened during COVID, where Joe Biden sold down hundreds of millions of barrels of the strategic oil reserve that the US was hoarding. Now, all of a sudden, this is a very different strategic asset that has huge upside, and the ability to do that means that from a protection perspective of price, you are going to, I think, protect yourself from the government dumping hundreds of thousands or millions of Bitcoin on the market that will not be absorbed by the market. So you'll have wild fluctuations. So that's a really positive thing. The final thing that happened in this first quarter was the repeal of SAB 121. I actually think it's bigger than the previous two, because this goes to, and I'm a self-custody guy. I'm an advocate for that. I've got a business running self-custody for, with clients. But one thing that's sort of gone under the radar, hasn't had much attention at all, is the repeal of SAB 121 in the US. And the US is kind of like a filtering system that whatever they say goes globally as far as, rules, regulations and adoption. Your brethren in the EU have different ideas sometimes, but ultimately they'll do whatever the US says. And this repeal of SAB 121 removes the cost of the banks custodying Bitcoin. So the reason why it was so costly and why not a lot of banks did it was because in order to hold $1 billion worth of Bitcoin, you had to hold $1 billion worth of cash as a reserve to offset that. Now they've repealed that 121, means they can hold $1 billion worth of Bitcoin and there's no cost of capital, i.e. the cash component, to be left on the balance sheet. They can use that $1 billion to then go and lend out $20 billion worth of home loans or whatever they want to use it for. So I look at that and think that is the first domino in a whole list of dominoes that is going to bring in Bitcoin into the banking sector. So they've now sorted custody. Obviously, over the next 5 years, that'll build out, but then there are going to be really simple products that are built on the back of that. We're going to have a savings product and a loan product, which will be built out. And you can see that Cantor Fitzgerald, owned by Howard Lutnick, or he's a major shareholder in that business and, one of the chief administrators in Trump's organization or Trump's administration. They're looking at putting to work $2 billion in the loan market. And that's only made possible because of the repeal of SAB 121. So all of these things are lining up that we're going to, whether we like it or not, have this filter through the banking system over the next 5 to 10 years.
Bitcoin custody is evolving, and while self-custody is important, it has its own risks and trade-offs. OnRamp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your custody setup. OnRamp secures your Bitcoin in a segregated cold storage multi-signature vault, guarded by 3 independent institutional-grade custodians, none of which have unilateral control. Your funds are fully auditable on-chain, cannot be rehypothecated, and can only move or withdrawn at your explicit direction. Multi-institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. Bitcoin is money, and as the price continues to appreciate, OnRamp helps you seamlessly tap into financial services like trading, inheritance, insurance, loans, IRAs, and more, all without compromising on security or accessibility. Check out onrampbitcoin.com through the link below and schedule a consultation with the OnRamp team to get to know them and learn more about their offering.
So when we look at the market right now and we are at 86K, I think many Bitcoiners are thinking like, yeah, it's crazy. It should be at 200K or 300K just based on all the things that we've learned, especially this quarter. So is the market then wrong or is it right? Like, how should we view it?
You know what? This is going to be particularly unsettling for a few people to hear, but the market is always right.
Yeah.
And sadly, it's our expectations of other people's understanding of Bitcoin that is ultimately wrong. And I share this with you that I think...
Good point.
And I don't sort of... there is no hyperbole when I tell you this, but if the world understood Bitcoin the way I see it, then we would have a multi-billion-dollar Bitcoin.
Mm-hmm.
It's just, that's how it would operate. It would fill in so many holes that I see in the financial system. And I look at this and think, it has the ability to solve so many problems that we're currently facing. Now, just because I see it and think this would be, an applicable solution to a lot of the problems that we're facing, doesn't mean the rest of the world does. And sadly, back to Bitcoin being a consensus mechanism, the rest of the world needs to find that consensus of what I believe to be true. And this is what's so important about the work that you do. Up to 138 podcasts now, hearing all of these differing opinions, trying to educate millennials about, why this is important. And this is why, I think you have one of the most important podcasts out there, because it's not going to be the boomers who rush headlong into this. They've already done it. They're reluctant to change.
Mm-hmm.
They've made it in their, they've either made it or they haven't made it doing what they're doing, and they're reluctant to change. As we get older, it's just, proven out that you are less prone to changing. And this is where Bitcoin, to me, represents a massive opportunity, an outsized opportunity for millennials to adopt this and really ride that wave up in a similar way to, our baby boomers had a massive wave up, massive tailwinds for 40 years. From 1980, they had interest rates go from 18 to 20% down to 0. Massive tailwind. You had property prices, unless you were lucky with a few little bumps along the way, you had property prices basically go 10 to 100x in that 40-year period. And I look at that and think, now that, interest rates have changed, we've now in a period of quantitative tightening. We've watched in the last 5 years the 10-year bond rate in the US go from 0.5% up to over 5%, and now it's back down to about 4.3%. Maybe that trade is over. The boomer trade is over of property. But guess what? And this is where I think the opportunity for millennials is. Bitcoin is the equivalent of the property market for the last 40 years, except that 100x that you had to wait 40 years for in property, you're probably going to get that condensed into the next 10 years. So I look at this and think, if I'm a millennial, I'm trying to figure out how to get as much of this Bitcoin as I can, because the next 10 years, there's nothing that comes close to this as an investment opportunity. Property's not going to do it. Stocks are definitely not going to do it. And the bonds are just, that stuff's worth less than toilet paper. So I look at this and I think, in my day to day, I literally look at, what are the investment opportunities out there, whether it's stocks, bonds, property, commodities, alternative assets, private equity, venture capital. And I look at this and I think, well, this is easy. This is like the simplest decision that one can make. It's just a matter of understanding what you're doing.
Yeah. To add to that, as a professional financial advisor.
Yeah, true. Yeah.
Yeah. Okay. That's the pitch for millennials, guys. Like I could not have done it any better. But yeah, I agree. I think I think you're totally right. Obviously, this is kind of my focus and also part of my thesis why I really want to focus on millennials. That I see this as the biggest, but also the only opportunity to actually build wealth for just this generation. But yeah, again, it's just hard to understand, right? There's so many layers to it before you really get to. I think also where you are at, like if you say like all the global trade will be settled in Bitcoin, all the daily global trade will be settled in Bitcoin, and then we're at like billions of dollars per Bitcoin. Like that is very far away. But if people go back to episode 2, they can listen to your argumentation, and it's actually very, very rational, right? But just the unlearning of all your preconceptions and all these things like that just takes time.
It's funny, since we had that conversation, I think that argument has gotten more to being the truth than further away from it.
I agree.
And so we'll watch how this plays out over the next 10 years.
Yeah, because a big part of that is the multipolar world that we're kind of like moving into, right? And the whole point of Bitcoin is that you can trade without trust, which it looks like is going to become increasingly more important. Right. So, I find that very interesting. The one thing before I wanted to go to like, what's your view on the rest of this year is, what are the most important changes for people to look at? You mentioned like SAB 121. That's of course more like a technically financial thing, right? That will open up at least the market for banks. But do you think there will be a lot of competition there? Because like why would I store my Bitcoin at a bank? Or why wouldn't I store it at like a Bitcoin native bank made by Bitcoiners, for example? How do you kind of like see that evolve?
Well, this isn't going to be popular, but I'll tell you how I see it. You are going to break down lending. It's all going to revolve around lending, and the banks are at a huge advantage when it comes to lending on Bitcoin, because there are now a host of things that can open up that opportunity for the banks to succeed with that. And I just want to maybe take a side note to give you a very brief history lesson of borrowing money on residential property and some of the iterations of that borrowing on property that has come to market over the last 40, 50 years that has totally changed that as an asset class. And if you look at two drivers for asset prices, the number one is availability of credit on it. And number two, when it comes to property, are demographics. So is the demographic growing and people are wanting that good more, or is it declining? And sadly, and this is to the point about property, we've got baby boomers sitting on nearly 80% of the wealth in property in the Western democracies. And young people can't afford to buy all the properties that they're holding on to. So it's just a simple law of supply and demand. Something's got to roll off and the price will have to drop at some point in time. In Australia, in Sydney, we're sitting on the average median house price is $1.6 million and the average income is $100,000 a year. So one average home is worth 16 years of income before tax, not after tax. It's 32 years after tax just for the home. So I look at this and think, that's after income tax, 32 years, and before any cost of living or interest on the properties. So it's wildly skewed to the downside, I think, as far as risk goes. And this is where, back to, Bitcoin, there are policies that the governments can institute to actually encourage borrowing and saving in Bitcoin. So if you look at some of the policies that were instituted for residential property, the banks used to lend 50% loan to value ratios. So if you wanted a $100,000 property, you had to put in $50,000. They had policies in the 70s that they wouldn't give single women a home loan because they deemed them a high risk of forfeiting or foreclosure on the home because they might have a baby and then no longer work, and they didn't want to put that person through that. Now, that sounds highly misogynistic in today's terms, but that was the reality 50 years ago. And they evened up the lending so that women could borrow. And the other thing is that they moved the loan-to-value ratios from 50% to 95%. So now all you need is a 5% deposit. You need 10% of the original deposit that you had. So all of a sudden, what's that going to do? You can borrow 95% of the property that's going to jam the property prices up. Now, there are two instances of government influencing the credit availability on an asset. And what I'm saying is the government has the ability to do that to Bitcoin as well. What if they said, hey, we're going to set up a Fannie Mae or Freddie Mac like they did for US residential property that's going to support the purchase and loaning of Bitcoin? These things can be done. It's just a matter of will. And we've just seen that the Trump administration has a propensity to do things that are different and to institute policies that they think are really good for America. But I can't think of a better policy that they could institute that would allow American citizens to go and borrow whatever they can afford on buying Bitcoin, and assuming that they had that loan in good stead for, say, a 5 or a 10-year period, the government would cover the volatility of that asset if it dropped below what what they actually borrowed. So these are all the things that are going to be coming to Bitcoin, but we're just not thinking of it yet.
What do you think about the talk about selling gold to buy Bitcoin, as some people are talking about in the States?
I think that's a great idea, because if I'm looking at this through the most brutal of lenses, and if you have your war game on, that makes perfect sense. You go and you destroy the price of the asset that your enemies are holding by dumping it on the market. You go and buy an asset that they can't purchase and they can't steal from you, which makes perfect sense to me. And most importantly, it's absolute digital scarcity, meaning there's no way that they can produce any more of it. And when they figure out what you've done to them, it's too late. And they'll be selling their gold on the market, but they'll be driving the price further down. In which case you could turn around and buy it for nothing. And the US can do that anyway because they hold the global reserve money printer. So I look at this and think it's extremely predatory, but it makes perfect sense if you're in a war. And a lot of people think we are. So I think, the US has the ability to do it. Will they or will they not? I'm not sure. But to me, it makes logical sense. If you're playing chess and you want to win, then that seems like a perfectly logical thing to do, albeit brutal and ruthless.
Yeah, I personally think that the line between, even if they sell 5% of the gold, I think it already shows that Bitcoin is at least as important. But over time, people will realize that it's superior to gold. But I think just that signal, I don't think it has to be a big percentage, if that makes sense.
I agree.
Right? It's just a signal. Okay, I sell part of my gold, I buy Bitcoin as a strategic reserve or as a national asset, right? And that will show that it's at least at the same level. And the price is definitely not reflecting that. So I think that could be a big catalyst as well. But I think it's all about perception, not necessarily about fully understanding, right?
And it's intent. What it is that is an intent.
Mm-hmm.
You get to show the world your intention, and incentives drive outcomes.
Yeah, I agree. And so, how do you look at the rest of this year? What do you think will be big drivers? I think many people are talking about global liquidity, to moving up again. What are the biggest things that you're looking at?
I think you nailed the big one, but I think there's going to be a potential surprise. So if we back out what you've just said, one of the biggest announcements that we saw this quarter was after, a 4 year, I'll call it a 3 or 4 year period of quantitative tightening. And like interest rates going up. We've now had Jerome Powell, Fed chairman, come out and say that he is looking at the end of quantitative tightening. And what that means is we're close to quantitative easing. So if quantitative tightening's ending, then he's about to turn the money printer on. The one thing I am not sure of is the dynamic between Scott Bessent, the new Treasury Secretary, and Jerome Powell, the Fed chair. Now, Scott Bessent's taken over from Janet Yellen, and Janet Yellen was not working in conjunction with Jerome Powell. You had Jay Powell basically slamming on the brakes, rising interest rates, and then you had the Secretary, the Treasury Secretary Yellen, out there giving money away like it was water. And so what you had was this weird dichotomy in the economy where you had Jay Powell slamming on the brakes, trying to slow this thing down because he didn't want the inflation to run away. And at the same time, you had Janet Yellen just throwing cash around like it was, like the interest rates were 0% again. Now, that role's now changed. Yellen's out, Bessent's in. And I agree with you. Money supply's gone up. One of the craziest things you can look at is the M1 money supply of China over the last, call it 3 months. It's nearly doubled. That is a great forward-looking indicator. China is a huge economy, and that will have some flow through. If we do have this M2 money supply explosion that everyone's talking of, then we will have Bitcoin rip faster than anything else. But if you look at the geopolitics, what's happening right now, you've got the new administration, you've got Scott Bessent needs to make his mark, and he needs to get the markets under control. He needs to let them know that he is in control now. And what we've got is really a role reversal between Jay Powell and Scott Bessent. Scott Bessent, Trump, Musk, and Lutnick, they want to get that debt down. And they want to show the market that they're capable of being fiscally responsible so that they can get that 10-year note down to 3, 2.5, whatever it might be, because that's the key indicator rate that's going to set the benchmark for every other rate in the US economy.
Which is also very important for them this year, right? With the rollover of the debt, like they need that to bring that cost of that new debt that they need in order to pay the old debt off. Like they need to get that down, right? Because eventually they want to get all the interest payments down.
Because what's really, sort of, it's hard talking about this, but 5 years ago Trump was in power, and the interest rates were 0.5%, and he said, "Why don't we just issue a 100-year bond?" And Treasury Secretary Yellen turned around and said, "No, let's not do that. Let's put that on a short-year term." So fast forward to where we are today, we've got $9 trillion of the $36 trillion rolling out. 25% of the US federal debt needs to be refinanced this year. And so they need to get that interest rate down dramatically. And what's really quite an anomaly, if you look at it in global terms, you've got the US 10-year is trading at 4.3, give or take, and you've got the 10-year German bond yield is trading at 2.7. Now, I can't believe that there's a 1.5% differential between the German bond and the US bond, the 10-year. Like not in any of the data that I look at is the German economy doing better than the US. And the problem is the German economy is the best of a bad bunch when it comes to EU economies. Now, if I'm the risk reward, you should be rewarded with the lowest rate if you're a lower risk. And I look at this and think the German economy is a much greater risk relative to the US, particularly if you take into consideration the fear of war with Russia. The US is on the other side of the world. It's got better metrics from GDP, inflation, just about everything you look at. Unemployment, all those numbers are better, yet the German bond is trading at a 1.5% discount on the 10-year. Now, in my world, that should be inverted. The US should be at 2.5 and the German bond should be at 4.3. Now, Trump and Bessent probably feel the same way, so they're going to do everything they can to really lower expectations, dampen expectations, and this is the thing that might stop money printer go brr, is them having to refinance that $9 trillion and really smash that rate down to 2.5%, refinance all of it, and then you can have it. So what does that mean in Bitcoin terms? To me, what that means is we might have a much later bull run than people expect. And if you overlay a political context on what they're trying to achieve, they need to have probably a 12-month bull run in the stocks and broader economy before the midterms, which means we could see for the next 6 months, I believe, a real crushing of the economy to a point where they get that 2.5% that they're trying to target. And then once they've got that, rolled it over, locked in all the rates, it's like, right, we're here, boys, we're running. But for Bitcoiners, it's like, no, we're ready to party now. Like, we're 30% off. We want this thing to go to 1 million. Let's do it. But they control it.
That's the patience.
They've got different ideas.
If you have your Bitcoin in self-custody, where are you keeping your Bitcoin seed words? For me, there's only one way, and it's backing up my seed phrase with stamp seed. It's a single durable plate without any parts or materials. Stamp your words into solid titanium, which is fire-resistant, water-resistant, and built to last. Unlike etching or engraving, stamp seed's patented tools help you to deeply stamp every letter for permanent readability, making it easy for you to protect your generational wealth. Don't risk losing your seed phrase on paper. Get a stamp seed plate for unmatched protection. You can use code BRAM, that's BRAM, for 15% off at stampseed.com.
So I think this is an interesting point, right? Because I want to ask you, like, eventually they kind of want to weaken the dollar, at least for some time. But yeah, like how do you think that will affect Bitcoin? Because what I think is an interesting conversation or topic is like, is Bitcoin risk on or is it risk off? And you see BlackRock saying like it's risk off. I think we both think it's risk off, obviously, because we basically just move to a whole new and different monetary system, right? So we just literally leave the other system.
Sadly, it's going to take a lot longer than you and I would like. So I think this is going to be a process of the next 10 years really playing out, because what we have is a really infantile size market in Bitcoin. And Bitcoin is hamstrung by two things. Firstly, it's a very small market cap and it's quite infantile in its development. So the problem with that is, well, the third thing in addition to that is it's 24/7, 365 liquid, which means that is the first asset that gets sold. And so although you and I understand Bitcoin to be the risk-off asset, a lot of people confuse risk and volatility and they want to conflate the two. And the real problem is that if you have a margin call coming up the next day because the Asian market tanks over the weekend and there's a huge shock to the system, if you're sitting there on a Sunday night at 9 o'clock in New York, there's only one market in the world that's open at that time, and that's Bitcoin. And so you are going to sell
prep for the Monday morning, you mean?
Correct.
Also, right?
You're going to sell whatever you have to do to meet that margin call in the morning.
Yeah.
And this is what the hedge funds, this is what the traders do. They hold this as a hedge. And the second there's a spike in the market, you'll see them sell that. And this is where back in sort of March 2020, we had nearly a 30% decline in a 48-hour period. Now, why was that? Because it was a Sunday night. They needed liquidity. They needed to meet their obligations the next day, and they did whatever they had to do. They sold as much Bitcoin as they could that they needed to meet the obligations the next day. Sadly, there's no other asset in the world that is going to take the place of that. So although it's a risk-off asset, it's going to trade like a risk-on asset because there's no market in the world that has that liquidity profile. There's no market open on a Sunday night at 6 o'clock in New York other than Bitcoin.
Could we spin that as a feature?
Sorry?
I said, could we spin that as a feature? Well, I think it is a feature, right? I mean, it's when we talked about countries, I had to think about a tweet I saw. It's permissionless cross-border final settlement. I read that like last week, and then I thought, yeah, that's it. Like it's constantly, like it's the only thing you can move constantly, everywhere, whenever, instantly, right? And so, yeah, that's a good thing. But in the perception of, I think that's a good explainer that you just gave. Like in the perception of people seeing Bitcoin tank, with that carry trade, and like over the weekend, they're like, yeah, people are dumping Bitcoin. But I think your explainer is actually what is happening because, if you truly understood Bitcoin, you would probably not use it like that, and you would see it as a risk-off asset and just keep stacking it. Just basically that.
I agree. And this is where, because market cap of Bitcoin is so small, like it's less than $2 trillion on a relative scale, as Bitcoin grows into, a tens of $1 trillion asset, hundreds of trillions, and what I think will be thousands of trillions of dollars per market cap. As that grows in size, that will be able to absorb more and more market participants on a Sunday night selling. So we're not going to have those massive drawdowns when there's low liquidity in the market. And the other thing that I should say is, and how do we spin this as a positive, not a negative, is once people have finished selling, what's the first asset they buy in, and what's the asset that recovers faster than everything else? It's Bitcoin. So, once they've dealt with the liquidity problem, the first asset they're rushing to buy to get back is Bitcoin.
And so parallel to this, so I think, there's some things that need time for people to understand. But parallel to this, we do see like more institutional investors are planning to increase their Bitcoin allocation. I think we have some 13F filings coming up also for Q1, right? So we're going to see companies that hold over 100 million in new assets. So every time that these filings go public, we see new companies that have adopted Bitcoin. That's also constantly increasing. What do you expect is going to be the effect of this on the market? Because I think there's like multiple parallel roads that are being or paths that are being developed, right? And each day more and more people understand what Bitcoin is. They move into it. The institutional investors do that too. So the hodl rate will go up. More Bitcoin will be hodled. I think that's what actually is a catalyst for the volatility. If we what we just talked about, if there's just less Bitcoin that's traded, the volatility is going to be higher. So how do you look at that also, with regards to the work that you do?
I think the institutional adoption has taken on in the last 12 months a dramatic shift. And 12 months ago, it was a career risk to be advising on Bitcoin. And now it's a career risk not to be advising on it. And truth be told, we haven't seen anywhere near the level of corporate adoption and institutional adoption that I would have expected by now. My expectation is over the next 5 to 10 years, we have a 5 to 10% allocation to Bitcoin from the institutions. And I think that's on the low side. So I look at this and think that's a huge, an obscene amount of capital that needs to flow into Bitcoin in order to fill that requirement. And what's interesting about this, and this is where I could probably go really, really deep with you if you wanted to on this, but on a really shallow level, Bitcoin represents an asset that is not going to affect mainstream when Wall Street and institutions speculate on it. Now, this is a huge development because this is the first asset that's come to Wall Street that hasn't had a downstream consequence or a social impact on Main Street. And I look at this and think, when the world figures this out, the institutions, Wall Street, BlackRocks of the world are going to spend most of their time speculating on Bitcoin and coupling that with government bonds or treasuries. And what that is going to do is that's going to dislocate almost permanently the risk that Wall Street has inflicted on Main Street for the last 40 or 50 years. Well, in perpetuity. And so what we have now is a speculative asset that Wall Street can play amongst themselves and blow themselves up with that's not going to have downstream consequences and costs to the mainstream world. And I look at this and I think a very real world application of this is Larry Fink in the 1980s created his tokenization of mortgage-backed securities. Now, if you follow that forward to 2008, the evolution of that product created the global financial crisis, where they packaged up and securitized through tokens, and not the tokens we know, but they securitized through tokens the entire residential property market of the US. And what did that lead to? That led to poorer credit decisions, lower quality of borrowers, and it effectively led to prices running up dramatically, cost of housing getting out of hand, and then a huge pop in the US housing bubble. And that was all made possible because of the speculation that Wall Street was making and the demand that they had on those residential and commercial backed mortgage securities. And now we have an asset that is removed from Main Street that Wall Street can speculate on. The problem is it's just such a small $2 trillion industry at the moment, not even. But through time, my expectation is that will be a multi-quadrillion dollar market cap, and they'll be able to speculate and remove the risk to Main Street from the Wall Street speculation.
Yeah. One thought I have there is that they are probably going to do that, but the absolute scarcity of Bitcoin will bite them eventually, right? Like I think that and the forced transparency, I call that forced transparency, right? Like you cannot play these abstracted games anymore. They will try, but when you get called upon, the proof of reserves, for example, yeah, you should show them, and if you don't show them, then you instantly lose trust. So I think that's a very interesting thing that is going to play out in some way. I think there will be like some TradFi firms that will have huge damage from it, that will show kind of like the games that they are playing.
Absolutely.
But it's not possible on Bitcoin.
No.
They're trying.
People will try and game it. You're correct. And a lot of people are going to get hurt. And sort of a message that's going to become really important for us long term, I think, is, you're only going to leave your Bitcoin in custody that you're prepared to lose, because the banks at one point in time will blow up. The governments won't step in to support it or bail them out, in which case you will lose your Bitcoin and you'll have to deal with the consequences. And there are plenty of examples of Bitcoin lenders going to the wall and really creating havoc. But it's just going to be at a scale that we haven't seen and we're not aware of yet, because it's going to be on basically a retail banking scale.
Yeah, well, you mentioned lending, and also a bit before I wanted to ask about that. It kind of feels like 2025, 2026 will be like the period where Bitcoin-backed loans will really enter the market. There are many players that are setting this up, are launching this. I know you are working on something. How do you see that grow this year, and how important is that for the evolution of Bitcoin?
I think it's a natural evolution for Bitcoin. And a lot of people, the hard money guys, the early cypherpunks, look at that and think, no, we don't want to be a part of that. But I look at this and think there are going to be people who want to speculate with their Bitcoin, or who don't want to sell their Bitcoin, but want to monetize some of that time that they've invested in Bitcoin. And a way to do that without having to sell your Bitcoin and pay the tax consequences on that is going to be through effectively borrowing on your Bitcoin. And I look at this and I think there are going to be two ways to structure this. And there are sort of two offerings in the marketplace that I see, and I think there's room for a third, but we might have to talk about that another time. But first, two offerings that I see, you've got an offering that classifies Bitcoin as property. So you've got your HODL, your DeviFi, and maybe your Ledin that would be classified in that as an unchained and on-ramp with Arch lending. So I look at those four offerings in the marketplace and I look at that and think they classify Bitcoin as property, meaning that they are not going to rehypothecate your Bitcoin, and the interest rate is going to be over 10% in order to achieve that. But what that means is that lender is not going to rehypothecate your Bitcoin. You don't have to worry about them lending that one Bitcoin out to 10 people and trading it and watching those people blow up and then they lose your Bitcoin. And on top of losing your Bitcoin, they've lent you $1 million or whatever it might be. And then the creditor, through a liquidation or administration, comes to you and says, look, I know they lost your Bitcoin, but you still owe them $1 million. Can you pay us? It's insult to injury. But the first type is the property type, and that's going to be with a much higher interest rate because it's classified as property. And then the second type is going to be classified as currency, where the banks will put that on their balance sheet. They will rehypothecate that somewhere to the tune of 10 to 20x. And this is my conjecture, that they are going to pay you to borrow money on your Bitcoin if you use that as collateral. And that's such a weird thing to get your head around, but I'm certain with the way the market's moving, if you look at how lending works, when you can rehypothecate one Bitcoin to the tune of 20x, which is what the current banking regulations and the Basel III Accords allow the banks to do, well, if one Bitcoin's, call it, worth $1 million, they can lend out $20 million on a home loan because you can lend out that 20x. And on that $20 million, they might be making a 2% margin. or nearly $400,000 in interest. And I look at that and think, there's going to be a bank globally who's prepared to cut you in on the revenues that they're making on the back of your Bitcoin. And this is the really interesting thing that I look at and think, Bitcoin's the first globally ubiquitous asset. And so you'll be able to shop any bank on earth to put your Bitcoin with. And the repeal of SAB 121 is one of the most important things to allow this to happen. So this will happen over the next, say, 5 or 10 years. You'll be able to go shopping. And, you know, if you look at and talk to all of the hedge funds, then probably the most interesting thing they've done over the last 30 years is the yen carry trade. They borrowed money in Japanese yen, invested in the US stock market, and they creamed the difference, an arbitrage of probably somewhere between 5 or 6% per annum. And I look at this and think, when you hold Bitcoin, whether you're in, you know, Europe or you're in Australia or you're in America, you'll be able to go to the Japanese banks with your Bitcoin and borrow at 1%. And I look at this and think, for those people who hold Bitcoin as their collateral, think of all of the industries that rely on cheap capital in order to get ahead. You know, it's every finance industry, it's property, it's building. If you've got cheap financing, you're going to have a huge advantage. The two companies in the last 20 years who have had a distinct advantage in the cost of capital, the first company 20 years ago was Amazon. And the second company that's really only identified that as a huge advantage to them in the last 5 years is MicroStrategy. Mm-hmm. And they're probably two of the best performing assets over the last 20 years. And why is that? It's cost of capital. And so what happens when you can bring the cost of capital on a personal level down to the lowest interest rate in the world? And sadly, you know, the retail banks in Japan aren't going to take an Australian residential title deed, and they're not going to take a European one, but they'll take a Bitcoin.
It's interesting because this is the same part of the feature that we just mentioned, right? The fact that it is globally liquid, 24/7, 365. It is a feature when you talk about this, because if Bitcoin is recognized as a global borderless commodity, then you can actually start shopping around and maybe borrow in Japan if you live in Western Europe. I love that idea actually also in terms of like how that would fuel a market, because eventually that borrowing could be a perpetual thing and like a perpetual business also for liquidity providers around the world, right? So I think there's so much game theory also in Bitcoin, not only like individual adoption, but also this company adoption, the products and services people can build. The treasuries, you know, corporate treasuries, country treasuries, all these things. Like there's all this little game theory, and I think that's all fueled by the absolute scarcity, right? Like it's this game. I say game in air quotes. It's here and you can participate, but it's such a huge opportunity that many people still don't see. I don't know if you're very active on LinkedIn, but I love seeing the financial advisors on LinkedIn talk about Bitcoin. It's wild. Yeah, so they are still very far away from that. But again, the asymmetric opportunity comes from doing the work, right? And
it's funny. I stick up for, say, fellow investment advisors. A lot of them are hamstrung by their regulators in that they can't advise on Bitcoin. Yeah. Because it's not on the approved product list, they can't get any professional indemnity for it, so they can't, by default, give any advice on it. And that worm is turning, but it's just turning very, very late. They're going to be really late to the party, and they're costing their clients a lot of money from an investment upside perspective. So,
yeah, I agree. So when we talk about game theory in countries, do you think this year we'll see another serious country adopt Bitcoin? Do you think this will actually be the year where we kind of like see this game theory start or play out? Or do you also think that eventually will take longer? Because one kind of like counter take that I like is that if America really adopts Bitcoin, then it could also be that half of the world just thinks like, they're crazy. They're selling gold for Bitcoin. Wow, they're crazy. We got to stay away from this Bitcoin thing, you know, and then it's not going to happen, for example. Yeah. What are your thoughts there?
Look, I just want to caveat this by saying we are closer than we have ever been to nation state adoption and game theory at a nation state level playing out. However, I can't help but think that history is going to repeat itself. When I first figured out Bitcoin, I was scratching around thinking, gosh, I've got to buy as much of this as quickly as I can before someone else figures it out and it goes up 10x overnight. You know, you hear Michael Saylor talk about sleepless nights when he figured it out and then he realized, hang on a sec, I've got to get this money allocated as quickly as possible. I can't help but think that history is going to repeat, and this is the thing that's going to be mind-blowing. You've got the largest, the most powerful country on earth has told you they're going to do this, and the rest of the world's going to look around and go, yeah, exactly. And this is probably what's going to happen. Now, I could be wrong, but if I look at, say, on a personal level, a corporate level, those two former situations have played out where there's, one person has led and the rest of the market's been totally ambivalent about what they're doing. And I can't help but think it's going to play out the same way at a nation state level. But I would be very pleasantly surprised if I'm wrong. And I hope I am.
Yeah, again, that's why this is so entertaining to follow, don't you think? I think the upside for smaller countries that perhaps have a bit more, how do you say that, like, freedom to move away from, or act more in their own interest than kind of like the block that they are maybe associated with, like their upside is huge. And I don't know if you saw did you see the video, little report that was done on Bhutan with like the leader of Bhutan that talked about how they are mining Bitcoin with their hydro, etc. Like I think it's actually smaller countries like this that could actually benefit the most, because they have more autonomy in making this decision, not necessarily just the buying, but like the longer strategic outlook. And when I heard him talk, that's the leader of Bhutan, he's like totally orange pilled, like he totally gets it,
What's funny, if you boil that thought down to a personal level, the people who stand to benefit from Bitcoin the most are the poorest.
Yes.
They can buy Bitcoin now, and they can do it, and they can have an outsized return. The smaller companies, they can have an outsized return relative to large companies. And the smaller countries, they can do that too. And it's funny, probably one of the best business analogies, I think, which applies to Bitcoin is it's not the big that eat the small, it's the fast that eat the slow. And this is where small countries who are nimble, they have the ability to move much quicker than people with a whole host of assets. So they can get set at 100% much quicker than, say, larger or more disorganized organizations. So it's not it's not the big eating the small, it's the fast eating the slow. And this is where Bhutan is a perfect example. Bukele again with El Salvador, first mover advantage. It's fun to see, and it puts pressure on the big guys.
Yeah. With you, it's always fun to end talking about price and predictions. We briefly touched upon it before when we talked about liquidity, of course. I think I have two questions here. Maybe the first one is an intro to the second one. Do you think we'll keep seeing like the classic cycles, or are you more on the side of we'll have a prolonged, less crazy run-up bull market, like just we're going up, we're going steady, we're going up, we're going steady, kind of like how some people say, like, this is how gold went after the gold ETFs were introduced? Like, do you think we'll have like a prolonged bull market because like the perpetual buying, the size of the perpetual buying is slowly growing, basically? I think, as we alluded to before, like, are you in that camp, or do you think we'll still see the classic cycles just because human psychology?
I think we're going to see probably a hybrid of what you just described. I think we're going to see up and grind, up and grind, up and grind until the nation states figure it out, and someone who has access to their finger on the money printer can buy an unlimited amount of Bitcoin. And then we're going to see Samson proved correct with his Omega candle, and we're going to see a 5 or a 10x overnight, and we're just going to set the floor at $1 million. And what's funny is, and this is where one of my great Bitcoiner mates is checkmatey. I think he's one of, if not the best on-chain analyst that we have, and I'm so impressed with his work. And he's advocating for a pop, grind, and that's going to be the the situation that's going to grind us to $1 million, and we're all going to be drying our eyes with $100 bills and upset that it's $1 million and it's taken 2 or 3 years to get there. And I think there's the probability that he will be correct. And I think if you look at that skew, I would weigh that at a 90-10 skew that he will be correct. And what's interesting, he's going to be correct most of the way up. And then I think there's going to be a moment that things just completely change, and someone with a money printer understands what this is and realizes that there's no second best. There's no ability to get more once this is gone and it's tucked away in your coffers. And they will buy literally every Bitcoin available that's on the market, and they will set a price that's ridiculous just to pry that out of your hands. And if you don't have the ability to have a lending facility against that, then, you'll sell. You might sell 5 or 10% of your stack and sail off into the sunset richer than you ever dreamed of. And that's what I expect to happen at some point in time. The powers that be will understand that this is absolute scarcity in an asset, and they will want it.
Yeah, I think 84K is kind of like the new 58K, so that kind of proves the point. I think it's a very reasonable idea, just because we have the perpetual buying. I don't think we'll see the 80% drawdown again. I think we just had like 30 for 35 was kind of like the max.
Yeah.
Now
it felt like 50 in previous cycles.
Of course. Yeah. I mean, for me as well, like after 10 years, the red, double digit red kind of hurts still, but we know what this is, so that keeps us more at peace. But I think it's a very reasonable. That's probably the max pain scenario what you just described, right?
Yeah.
Just slow grind. Like, you're right, but it goes very slow, So and then if we look at this year, that was my second question. Like, where do you think it could go? Because if you look at it from like the classic cycle behavior, this should be the peak year of a bull run. Of course, it's a bit dampened now, as we talked about before. Like, what are your thoughts on the price for this year?
I think the cycle's going to be a lot later than we think, and my expectation is we see a 3 to 10x, but it might not happen this year. And the reason for that is going to be tempered with the requirement of the US to refinance that $9 trillion of debt. And they need to really crush the economy to get that done in an expedient fashion. So, I've got a whole host of sort of indicators and reminders that start in July, August, September, October. Hey, getting frothy, need to start talking to clients about, what they want to do. But if we have a subdued money printer and M2 growth at the money supply over the next 6 months, then I think that's just going to delay it. And, we might push through past into, sort of Q2 next year, where we see a peak in Q2 next year, whereas I would have, if you asked me this 2 years ago, I would have had an expectation that the start of Q4 this year would be the peak. But, with everything that's going on, we could see that pushed out to Q2 in 2025.
All right. Last question, and maybe that's good to kind of set our expectations. What are the biggest challenges you actually see on the horizon, whether it's this year or, in a prolonged bull cycle, as you just described?
I still think it's adoption. I think there is, and this is why what you do is so important. 138 episodes later, absolutely killing it. But the messaging and education around Bitcoin is the number one thing that we need to focus on. Self-custody, age-old principles, not your keys, not your coins, are really important, because we have 50% more Bitcoiners every year come into the market who don't understand, what this thing was originally built on, and they're learning. And that's probably why we've seen in the last couple of months, everyone screaming, kicking and crying and feeling so depressed, because 50% of Bitcoiners are brand new to Bitcoin and they haven't been through a 30% drawdown. The other thing, I think it's going to be one of the greatest challenges, and a great mate of mine in Jeff Booth is probably doing so much work in this space along with another legend, Gigi, in really focusing on medium of exchange for Bitcoin. There is no doubt there is a scaling problem with Bitcoin past layer one. Layer one is not able to deliver the ability to buy coffee and then buy a container ship. It's not built for that because of the limitations of the number of blocks per annum and the number of transactions per block. So I think the work that guys like Jeff and Gigi are doing are absolutely critical in garnering further adoption and really creating that circular economy. And that's probably going to be one of our most important things, because if we don't have a circular economy built on Bitcoin, then it makes it far more vulnerable to a state level attack. And so the work they're doing, I think it's the hardest problem to solve in Bitcoin. And I'm just thrilled we've got some of the best minds in Bitcoin focused on it, because I don't know how they do it, but they're making headway and they're making inroads in what I think is the most important problem with Bitcoins.
All right. Well, thanks for sharing. Thanks so much for your time. Really enjoyed this update. Maybe we should do this more often, and then we also get to talk more often. Yeah, man, always a pleasure talking to you. So thank you so much.
I'd love that. Appreciate your time, Brad.
Cheers.
I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, please like this video if you want to help shine a light on the message of Bitcoin, and subscribe to my channel to stay connected. I hope to see you for a next episode. Bye.